30 p.m.
This is India's #1 news network, and you're watching News 9. English news as it should be.
Very good morning. You're watching News 9. I'm Karthik Malhotra, and on the show today, we've got a power-packed panel which is going to discuss the GST reforms, the next-gen GST, as the GST Council is set to meet today as well as tomorrow. We'll have clarity on the rates, but what are the safeguards that the government must be aware of? We'll discuss that on the show today. Also on the show, Donald Trump, the US president, has continued with his jibe on India's high tariff, says 200% tariff on Harley Davidson made it difficult for the bike makers to sell in India. And of course, we will also be joined by a guest on the show today to discuss the rising gold prices ahead of the festive season. Remember, gold in India has touched 1,06,000 rupees per 10 grams. Which way is the yellow metal going to go? We'll get a view on the show today. You're watching Morning Brief at 9. Morning Brief at 9. First up, let's bring you all the headlines that we're following for you this Wednesday morning. The GST Council is set to meet today as well as tomorrow on rate rationalization after the group of ministers approved the centre's plan to cut slabs from 4 to 2 and a higher 40% slab for demerit goods. Finance Minister Nirmala Sitharaman, ahead of that big GST Council meet, says next-gen GST reforms to make the economy open and transparent. But reports are now suggesting that luxury electric vehicles could be taxed higher and may fall in the 40% tax slab. However, cess is likely to go. US stocks tank about 1% in their worst trading day in a month on rising yields in the bond market. And it's not just stocks that took a beating. Gold prices rise to record high of $3,500 an ounce in India. The yellow metal touches a record high of 1,06,000 rupees per 10 grams. Startups like Urban Company and Boat are among 13 approved by market regulator SEBI to launch their IPOs. Urban Company set for a 1,900 crore rupee IPO on September 10th. Russian President Vladimir Putin and North Korean leader Kim Jong-un at China's Victory Day military parade today. US President Donald Trump chides China. Xi Jinping sends warmest regards to Putin and Kim to what he calls China, Russia, North Korea conspiring against the United States. And Trump repeats his jibe on India's high tariff, says 200% duty on Harley Davidson restricted the motorbike maker from selling in India. Ahead of the crucial GST Council meet that will likely ratify the government's proposed cut in GST rates as well as reduce slabs from the existing 4 to just 2. That's 5% and 18% with an additional 40% tax slab on demerit goods like luxury cars and tobacco. Finance Minister Nirmala Sitharaman said the next-gen GST will make the Indian economy absolutely open and transparent, and it will reduce compliance burden on small businesses. Now remember, the proposed changes in GST are likely to bring all food items and textiles into the 5% tax slab. Similarly, white goods like TVs, air conditioners and refrigerators will now be all brought into the 18% tax slab. But in not the best news for consumers, few items like large cars, potentially even luxury electric vehicles and some sin items like tobacco will now attract 40% tax, but additional cess will be done away with. Now, could there be more surprises coming consumers' way between today and tomorrow and the 2 days of the GST Council meet? And are these safeguards, there should be any safeguards that the government should be wary of and keep their guards up against? Let's discuss with a panel of experts joining me on the show today. Subhash Chandra Garg, former Finance Secretary, Teresa John, Deputy Head of Research and Lead Economist at Nirmal Bang, and Dilip Chenoy, Chairman of India Battery Swapping Association. Thank you so much all for joining me here today. Mr. Garg, let me begin first by having your take on this all-important GST Council meet today. Now, we know for a fact that there are going to be two primary slabs, 5% and 18%, and a 40% slab for demerit goods, as the government is calling it. Now, is there a likelihood of consumption not really increasing in line with government's expectations simply because food items and textiles being brought down to 5% may not immediately spur demand, given the price elasticity of demand in these essential items may be low?
So, see, the two big agenda before the committee meeting is to reform the rate slab and also to provide the consumption boost by what Prime Minister dubbed as the Diwali gift, giving away the tax revenue for consumers to sort of raise their consumption expenditure. The reform agenda we have actually about 7 rates today, and this will bring down to 5. To that extent, this is a reform, definitely, but not the game changer or fundamental reform of the GST tax structure, which the economists and have been asking for. To that extent, whatever reforms are coming, but the thing is in tax revenue going to go away. We have the base of 22 lakh crores. Then the government finances would come under strain.
Right.
Especially that of the state governments, because they bear a larger part of the GST giveaway.
That's right.
Now, how the consumption is going to be affected, I think it will depend upon two major factors. Number one, whether the tax giveaways are passed on by the manufacturers and the dealers to the consumers or not. There is doubt about it. There is a lot of complexity in it. Right. How do you calculate actually what kind of difference it is making to their tax liability and all? And secondly, whether the government comes up with this anti-profiteering rules or something. If they bring that anti-profiteering rule, it will mean that the government wants this to be passed on to the consumers, right. But it complicates the scenario for the corporates. So I don't know. What we see, one instance we can see very well how industry is looking at. You saw the car dispatches by, which is the biggest item of the giveaway, so to say.
You're right.
September there is a 8%. In August there is an 8% reduction by wholesalers to the retailers, which means that they're not anticipating very high kind of consumption boost. But let's watch.
Mr. Garg, hold your thought there. We will try and come back to you. But Teresa, John, car dispatches also in the monsoon season happen to be, an all different story, and we will get Dilip Chenoy's view on that. But what I want to understand from you is specifically on this SBI research report that came, which said that tax collection could potentially fall by as much as 85,000 crore rupees. But consumption could increase by about 2 lakh crore rupees or so. Now, given the fact that GST collection has been on a roll, just last month we saw data suggesting that there's been a 6.5% increase in GST collection by the government. How much of a dent is that going to take, given that the overall tax slabs are being rationalized downwards and there is going to be a likelihood of items getting cheaper and hence lower tax collection by the government?
So in the near term, there will definitely be a revenue hit for the government. So in our estimates, it depends on, how much of the goods in the 28% bracket actually move to the 18% bracket. Right. And most of the goods in the 12% bracket will anyway move to the 5%. Maybe a few could move to the 18% bracket. But the revenue loss, it could be close to 1 lakh crore in a base case scenario, could be higher also at 1.5 lakh crore in a worst case scenario. So there will definitely be revenue loss. I think obviously the revenue concern would be for the state government, but one giveaway for the states would be the fact that if you bring the GST compensation cess into the 40% tax slab, and that is shared with the states. So from 2022 till 2025, the GST compensation cess has not been shared with the state governments. It has been used to repay the back-to-back loans and to some extent to fund the centre's fiscal deficit. So now if that compensation cess is encompassed in the 40% slab and then shared with the states, for the states, it could not be that much of a big revenue loss. So that could ensure buy-in from the states for the tax cuts. But definitely, I think the centre will have to take, at least in the near term, some hit on their revenues.
Right.
But
so
even in a worst-case scenario, we don't think it will be more than 20 basis points of GDP.
20 basis point of GDP. Well, that's the worst case scenario. Dilip Chinoy, there are also reports which are now suggesting that electric vehicles, which have thus far enjoyed that very pretty 5% tax slab, some of the luxury electric vehicles could move to the higher 40% tax slab. What does this mean for the industry, given the fact that the government has been all along trying to incentivize the purchase of electric vehicles? Now, a 40% tax slab on cars costing X amount of money, apparently, is that likely to dent India's overall EV vision?
No, I think there are many things in which the group of ministers and the central government agreed on. But the taxation of EVs was one area where there was not complete agreement. I think the centre is still pushing for a short to mid-term concessional rate of taxation across all EVs at 5%, whereas the group of ministers and others have actually looked at these three slabs for EVs, one which are below 20 lakhs, the others between 20 to 40 lakhs, and the one above 40 lakhs. So that's the current discussion that is happening here. But, one of the challenges here is that the timing of this current GST council meeting and the festive season is kind of coincided. So one of the reasons that you're seeing a decline in wholesale sales to dealers is because there's a hope that the vehicle GST would reduce, and therefore they would be able to supply the vehicles at a lower rate. But one thing is for certain, and I think you've heard all the chambers actually come out on behalf of industry of saying that whatever GST cuts are given as a result of GST Council, they are planning to pass on the benefits to the customer and not retain any of it. I think Mr. Garg's point about this concern and the reintroduction of the anti-profiteering clause is, a view, but I think industry here is very, very clear that they will pass it on going forward. And I think this is a part of a process, right? I think maybe 2 years down the line, you'll see a further simplification of this slabs going forward.
All right. So let's hope that the companies do pass those benefits down to the consumers. But Mr. Garg, there are anomalies in the current GST system, and one of those happens to be the inverted duty structure. Again, very relevant for electric vehicles. How do you think the GST Council is going to address that in the context of these next-gen GST reforms?
See, when you have so many slabs, including zero rate or 3% or 5% kind of thing, and you try to fit in the entire supply chain structure into those kind of rates and slabs, the issues of inverted duty structure come in. It is in the custom side, it's also in the GST side.
Right.
It's not, there is no principle which you can take except that there should not be an inverted duty structure. But that is not you can address by when you have so many or multiplicity of the rate structure. The solution to that is to move further. Now from 7 to 5, can we move further to 3 as soon as possible? That is the way to go about. What I would just like to say about one thing. The proposal or the talk about the anti-profiteering rule is there in the government. I don't wish this comes.
All right.
Because if it comes, it complicates.
Right.
Let us leave it to the industry to decide what kind of benefits they are getting from this and what the market can bear depending upon the demand and the supply structure and all.
Right.
If the government interferes in it, then it will complicate, and
Got
there would be chaos
Right.
all the way.
Sure, point well taken, Mr. Garg. Teresa, John, I also want to bring up this contentious issue on health insurance premium and GST on health as well as life insurance premium. And that has been doing the rounds for as many GST Council meets in the last 2 years that I can remember. And now there was also a voice from the industry saying that a cut in GST rates on health insurance may not stem the of the IDC, and that may in turn make health insurance even costlier, if not at best keep it the same. So how do you think the GST Council should manage and navigate this complex issue of insurance premium?
Yeah, I mean, so I think the GST Council will need to take into consideration the ultimate impact on the consumer or the the purchaser of the insurance policy. I think bringing down the insurance, the tax slab on insurance premiums would be beneficial, but I think it will also depend on the extent of pass through. So as Mr. Subhash Garg was saying, I mean, it will also depend on the anti-profiteering clause and the extent of monitoring of the pass through of the insurance cut that will be eventually passed on to the consumer. That will need to be monitored.
All right. Final word to you, Dilip Chinoy. As far as the auto sector is going, and the health of the auto sector pretty much, at some level is still the barometer for the health of the economy. What was being mentioned, and I told you I will come to you on that, was that auto dispatches have actually been slow in the month of August. But given the fact that it has been monsoon season and in the advent of the festive season coming up, in any case, auto sales are likely to increase come Diwali, and now with this double bonanza of lower GST, how do you think the auto sector is poised from here to sell more cars? Because we've in any case been doing 4 million plus cars a year. So how do you think the auto sector from here is going to shape up?
So I think there are going to be two fundamental things happening in this festive season. If the EV duties pan out as the government wants them, not necessarily as the GST Council wants them, you would see a tremendous uptake of the EV segments going forward. The second thing, which I also mentioned earlier, is that the current dispatches are held up because of the uncertainty on the GST front going forward. If the clarity comes, and if it is in the other than the special rate for the luxury vehicles, if the other the rate is and picking up, and you will see immediate kind of release of vehicles into the market. Right. So the festive season, the coinciding of the monsoon and the festive season is a tricky one. Yeah. I tried looking in the past when it happened. It's not really actually happened.
Okay.
In the years when Diwali and Dussehra have been early, the monsoon has actually stopped early.
Receded. True.
This time it's not happened.
Right.
So it's a big challenge there.
All right, let's see how that challenge gets mitigated. But Subhash Chandra Garg, Teresa, John, Dilip Chinoy, always a pleasure. Thank you so much for joining us here on this very important GST Council meet story that we are tracking all day today. Moving on now, Chinese President Xi Jinping welcomed the arrival of his counterpart, Russian President Vladimir Putin, as well as North Korea's Kim Jong-un, as China kicked off its largest ever military parade on Wednesday, a show of its growing firepower as well as geopolitical clout. Now, the 70-minute showcase is set to feature aerial displays, marching troops, as well as cutting-edge military equipment such as hypersonic missiles, unarmed drones, and outfitted tanks. Now, Xi Jinping will review the troops lined up in formation before delivering the keynote speech. Major roads and schools have been closed in Beijing for the parade, the culmination of weeks of painstakingly security preparations as well as midnight rehearsals. Now, the highly choreographed Victory Day spectacle comes as US President Donald Trump's America First stance and trade wars have strained Washington's long-standing alliances. Now, more than 20 world leaders are attending the Victory Day parade, marking 80 years since Japan's defeat in World War II. Now, remember, this is Kim Jong-un's first major multilateral appearance and the first time a North Korean leader has attended a Chinese military parade in as many as 66 years. The parade also highlights China's growing influence in Central, West and Southeast Asia, with more regional leaders attending compared to the last parade back in 2015. Experts describe the parade as part of a memory war in which China and Russia challenged the Western narrative of World War II, highlighting their role in defeating fascist forces. Meanwhile, US President Donald Trump used his Truth Social platform to cast China alongside Russia and North Korea, urging President Xi Jinping to give what he calls his warmest regards to Vladimir Putin and Kim Jong-un, as according to him, these three countries are conspiring against the United States of America. Time for a very short break right here on Morning Brief at 9. When we come back, a look at stock markets as they open just about now, as well as the rising gold prices. How long will that rally continue, especially ahead of the festive season? You're watching News 9.
Dreaming about me.
Love is to get lost in the look. Unlimit Love B6 Pack 2 starts at 21.9 lakh.
ये बेस्ट है सर।
हमेशा वाला क्यों नहीं?
मिश्रा जी, आपके लिए फूलों की बरसात, बिरला ओपस एश्योरेंस देने के लिए।
मतलब प्रोडक्ट वारंटी?
वारंटी तो है ही, ये एक्स्ट्रा है। 1 साल में पेंट को कुछ भी हुआ तो पेंटिंग वापस करके देंगे।
वापस करके देंगे?
वो भी फ्री।
फ्री?
पेंटिंग में पहली बार बिरला ओपस एश्योरेंस। रजिस्टर करो birlaopus.com पर।
This is nothing. My Skoda is 5 stars. तेरे को पता है मेरी Skoda ना ऑटोमेटिक है और वो भी 7 स्पीड। कुछ भी। Hello guys. My Skoda can fly to Jupiter like a rocket.
Skoda.
Welcome back. You're watching Morning Brief at 9 right here on News 9. Let's bring you all the market action. Let's first begin with what went down on Wall Street yesterday. Well, Wall Street stumbled at the start of September with stocks falling sharply on Tuesday. Now, investors returned from the Labor Day holiday worried about a federal court ruling that declared most of President Donald Trump's tariffs as illegal. The decision has raised fresh questions about the future of his trade policies, sparking jitters across U.S. stock markets.
Wall Street started September on a sharply lower note on Tuesday, with the Dow losing more than 0.5%, the S&P 500 shedding roughly 0.7%, and the Nasdaq sliding more than 0.8%. Investors returned from the Labor Day holiday rattled by a Friday appeals court ruling that most of President Trump's tariffs are illegal. Trump responded Tuesday afternoon by saying his administration will ask the Supreme Court for an expedited ruling on the tariffs. The latest tariff turmoil comes as markets enter what is traditionally a weak month for stocks with more uncertainty, says Mike Muscio, president of FBB Capital Partners.
And so now something that we thought was kind of settled isn't maybe as settled as we had expected. And thereby we're getting a little bit of market turmoil. Earnings are kind of behind us at this point. Last week was big earnings, kind of the final large earnings week. And we're heading into September with a much awaited, or much anticipated, I should say, jobs report on Friday. So some concern over how far this tariff thing really has run through, and a new data point ahead of a Federal Reserve meeting in a few weeks, and we got some weakness in the markets.
Stocks on the move Tuesday included Alphabet, which soared more than 6% in extended trading after a U.S. district judge ruled that the tech giant does not have to sell off its Chrome browser. But the judge said Alphabet does have to share its data with online search rivals. Shares of Kraft Heinz fell about 7% after the packaged goods giant said it will split into 2 listed companies, unwinding a decade-old merger with the combined company never achieving its expected growth. On the flip side, shares of PepsiCo gained roughly 1% after Elliott Management disclosed a $4 billion stake in the beverages company, urging it to revive its soda business, boost its share price, and become more competitive.
All right, and from Wall Street, let's shift gears and move into Dalal Street as Indian markets opened about 10 minutes ago. Well, it seems to be a somber start for the markets this morning, pretty much keeping in line with the closing that we saw yesterday, as well as the kind of bath that we've seen. Not a bloodbath really, but the kind of drop that we've seen in US markets. As you see on the boards right now, Sensex is inching towards that 80,000 mark. In fact, we've got the arrow wrong. Sensex is down this morning, but racing towards that 80,000 mark, and anything below that in the 79,000 levels is going to be at least a psychological demoralization for investors out there. Meanwhile, Nifty 50 also now coming a little bit below the 24,500. Well, it's slightly above it right now, but racing towards coming below that 24,500 odd mark this morning. Meanwhile, the small cap and the mid cap space is absolutely flat, no change at all, and volatility in the stock market also seems to be low. So markets really not really responding very well to everything that we know about the GST Council meet today and the potential rise in consumption by way of that, perhaps waiting in anticipation for the GST Council to ratify those rates. Meanwhile, let's pull up the Nifty 50 heat map and try and see which are the sectors which are adding to the pain this morning. Reliance is absolutely flat. Remember, this stock was up at one point almost 2% yesterday and closed the day about 0.9% or so up. Meanwhile, the IT sector is responding with mixed cues towards what we saw in the US. Remember, big tech stocks like Nvidia had lost as much as almost 2% in trade yesterday, but the ripple effect or the knockdown effect is not really apparent as far as the trend on the Indian IT story is concerned. Meanwhile, the banking sector also showing a little bit of a mixed signal. ICICI Bank is down about 0.5%. Axis Bank, on the contrary, is up about 0.4%. So is the state lender SBI. Meanwhile, Bharti Airtel down about 0.5%. Auto stocks are looking a little healthy this morning. Mahindra and Mahindra, which had lost a lot of ground earlier in the week, is now up about 0.8% or so in trade this morning. Well, I can't really see a trend line in the market right now. To assess the mood of what's really going down, I hope our special guest, Nishchal Maheshwari, market expert, who joins us this morning, is able to put this into perspective for us. Mr. Maheshwari, what do you make of what you see on the charts this morning? Pretty much mixed signals and no visible trend line, at least to a novice like me.
So I think there is this amount of uncertainty basically in the markets because I think at least a week before the US market had more or less settled down as far as tariffs is concerned, and I think a couple of days back the ruling which has come from a session court, I think that has rattled the market again. So there is uncertainty around that. And today, as you were saying, basically the GST Council meeting is there, so people are anticipating. So I think that is where the market is. So in sort of a anticipatory zone.
What are some of the market news anticipations that you are following right now? Because now we know that there is, at least for the time being, some clarity on tariffs that they're going to stay at 50%. There is some clarity on the GST reforms which are likely to be ratified by the GST Council today and tomorrow. So apart from these two big global as well as domestic events, is there something else specifically holding markets back right now?
So earnings is the issue basically. I think earnings is what market is not able to fathom basically how it's going to pan out. Earlier, we were all expecting that the second half of the year is going to be much better. But given these 50% tariffs basically, I think now we have to see how this is going to impact. Though on the listed space, basically you may not see much impact, but the second derivative of the of this fallout is going to impact the consumption, and consumption was supposed to be leading the second half resurgence. So that's why I think market is a bit jittery at this moment. People want to really see basically how this wedding season and the festive season plays out. And if the musings are good, basically, I think you will see market higher again.
Talking about the consumption story, I want to bring up some consumer durable stocks. In fact, the FMCG stocks, I beg your pardon, not consumer durable. And again, there seems to be a little bit of a confusion there this morning, Mr. Maheshwari, because the GST Council meet is likely to now ratify rates for all food items to be in the 5% tax bracket. But we are seeing pretty much all consumer food stocks like HUL, like Nestle, like Tata Consumers down in trade this morning. ITC, on the other hand, which is likely to attract a sin tax of 40% on its tobacco products, is up about 0.6%. So there seems to be some sort of a mismatch between what we are understanding by way of news and what we are seeing on the charts.
So I think all these stocks have already run up in anticipation. If you really look at it, most of these stocks are anywhere up from 5 to 10% in the last, from the time of 15th August when the Prime Minister made their announcement about GST. So I think it is already there. Now, how much of this tax cut is going to boost the consumption, especially of the FMCG goods? So you have to understand, basically, it's a finite thing. It cannot be... you cannot consume or you cannot do brushing twice a day or more 4 times a day. So you have a finite demand. So that's why I think market is anticipating that it may not change the fortunes of this country or fortunes of this company dramatically.
Right, of course, essentials cannot be, the price elasticity of demand on essentials is always expected to be low. Meanwhile, markets have recovered, Mr. Maheshwari. We are seeing now the charts have turned, the red has turned into green, almost flat though, but we have Sensex at least inching up almost 100 points or so from the day's low when markets open. So again, is this some sort of buy on dips that we are seeing? Market is ebbing down. Investors want to quickly stack up some stocks, and as soon as prices rise, they want to sell again. Is this sort of a profit booking and buy on dip strategy playing out in the markets as you see it?
I think it is basically a trading market. So one has to be very, very nimble footed in this kind of a market. If you do not have that kind of a bent of mind, basically you should stay away from the market for the time being. I think the best thing is to wait it out rather than actually get into the market in a hurry.
Wait it out, not get into the market in a hurry. Meanwhile, I also want to discuss the IT sector with you. Now, we've seen this sort of divergence between what we see in the US and its knock-on effect on Indian IT stocks, especially the IT stocks on the Nifty 50. Of course, companies like Coforge, Persistent Systems have outperformed the Nifty 50 IT pack. But again, on a day when we saw the US markets take a massive beating, in fact, IT stocks like, and the big tech stocks like Nvidia, Google, Apple, all of them taking a beating, we are seeing a mixed signal on Indian IT stocks. TCS is up about 0.4%, Infosys is down about 0.8%, and HCL Tech, Wipro, Tech Mahindra almost flat. So again, no real pattern that is visible as far as IT stocks are concerned. What's your view on this?
I think IT is now forming the bottom somewhere. Basically, I think they are down almost 20% from the top. Plus, what you have to see is the rupee depreciation is going to help IT. Again, anticipation of an interest rate cut in the US in September is going to help IT and the demand in the US. So I think the IT is in a sort of a bottom formation kind of a zone. So on dips, one should be looking to add IT to the portfolio.
Add IT to your portfolio on dips. Which are the other sectors, Mr. Maheshwari, that you're bullish on when it comes to at least buying on dip as a strategy?
So I still continue to believe that consumption, basically both FMCG as well as on the FMEG, both these sides, one should continue to look at it. Auto is also a part of it. So I think consumption is another sector basically which one should continue to accumulate at lower levels.
So FMCG as well as consumer durable seems to be one of the recommendations as far as sectors go coming from Mr. Nishchal Maheshwari this morning. I also want to talk to you in the context of tariffs and in the context of the fact that the pharma sector so far has been kept outside of the tariff, but tariffs as high as 200-250% are being spoken about by the US administration. So when it comes to pharma stocks, health stocks, how should investors tread right now?
So I think the broad consensus on pharma is that there will be no tariffs because US almost imports 90% of its generic drugs. And if you put a 200%, 100% kind of a tariff, basically, I think it is all going to get passed on. And it is ultimately going to increase the healthcare cost of the US system. So that's the thought process there. but then you cannot really predict what's going to happen. So I think similar to as far as other sectors are concerned, I think one should be cautious about it. But I'm more positive on pharma than the other export-oriented sectors.
All right, more positive on pharma, but hard to predict. Well, we will not hold you to a prediction, but Mr. Nishmal Maheshwari, thank you so much for your time. As always, pleasure having you here on News 9.
Thanks a lot.
And even as markets are pretty much in a mixed bag territory, a little low, a little high, gold prices are a little more certain that have hit a record high on Tuesday, climbing globally above the $3,500 an ounce mark. Now, this surge comes as investors bet on a US Federal Reserve rate cut later this month. Now, traders are now pricing in a 90% chance that the US Fed will lower rates by a 0.25 percentage point at the September 17th meeting, driving strong demand for the precious metal. Meanwhile, we also have the Indian benchmark indices post a lackluster performance, and gold and silver have posted a strong rally. Gold prices trade as much as 32% higher, and silver prices are now up about 40% or so just this calendar year 2025 alone. In fact, yesterday's closing on the yellow metal was as high as 1,06,000 rupees for gold in the open market for every 10 grams. Now, the rally in safe haven assets like gold and silver is driven by concerns over uncertainty and financial stability. Remember, gold and silver prices have surged more than 30% this year, cementing their status as the world's most sought-after safe haven asset. The rally comes as geopolitical tensions, currency volatility, and fresh tariff disputes trigger a risk of sentiment among global investors. On international exchanges, gold has risen as much as 32% year to date to trade above, like we told you, the $3,500 per ounce, its highest on record. Silver, meanwhile, has outpaced gold, climbing more than 40% to $40 an ounce, a level that was last seen back in 2011. In India, gold prices have advanced as much as 34%, 2% more than global prices in this calendar year 2025, trading on an average between 1,02,000 and 1,05,000 this year, but crossing that 1,06,000 mark yesterday. We have a very special guest joining us this morning to help us put all this into perspective on what is likely to be the future of gold prices. Kunal Shah from Nirmal Bang, commodities expert, joining us this morning. Kunal, help us understand festive season around the corner. Gold at record high, rising bond yields, crashing stock markets. How high is the precious metal going to go?
See, right now the narrative is that we are heading towards a scenario of economic condition called stagflation, where we are going to see a lower growth and a higher inflation. So I think that is going to be the narrative, at least for some time. And till the time Trump reverses his tariff, I think it is very difficult for inflationary expectation to go down. And hence, gold and silver are responding the way it is responding. So if you look at the bond yields in Europe, in US, everywhere the 30-year bond yields are continuously shooting up. And that is basically sparking the worry that what will happen to overall bond market if this continues. Right. So I think the markets are screaming that either Mr. Trump should withdraw from the tariff, otherwise the inflation is going to shoot up. So till the time we see that kind of steps taken by Mr. Trump, I think gold and silver will continue to remain higher, and it will continue to attract the money flow in the system. So I am of the view that gold and silver in near term have given excellent return and will continue to do so in times to come. So right. Buy at dips is the strategy. $3,700 is the target for gold, and $45 is the target for silver.
All right, so $37,000 an ounce is the target for gold. Ceteris paribus, you used an economic term, stagflation, I'll use an economic term. Ceteris paribus, no change in tariff, no change in the policy of economic policies of Donald Trump and his administration. What does this 37,500 levels mean for Indian consumers who are heading into Diwali buying season?
I think it's going to be a very tricky one, because on one side the prices are at all-time high, 1,06,000 rupees on MCX plus GST if you add. So customers are going to find very difficult. But I would recommend that if you want to buy 50 grams, you can buy 25 and wait for a dip. Or if you want to buy 10 gram, you buy 5 gram now. But it's unavoidable because it's a festive season going forward. And looking at the way the uncertainties across the world is going on, I don't think so that there is going to be a crash in gold prices until there is a solution to the Russia-Ukraine war and ongoing reversal of tariff. These are the two key factors which can lead to a sharp correction. Otherwise, gold prices, you are not going to see much correction.
All right. So then an obvious final question to you, and I think I know the answer already, but for clarity for our viewers, those who may not have the money to buy gold at these prices but are holding on to some gold, I'm sure your advice would be hold on to that gold and don't sell it just as yet. Am I right?
Yeah, I mean, there's no reason you should sell it until you need money. Otherwise, you should remain invested because we are in uncharted territory. I have not seen a time, we've been in markets from last 20 years where a bond yield, 30-year bond yield across the world, Europe, UK, US, everywhere 30-year bond yields are shooting up. So this is not the time when you get rid of your gold. You don't know if something goes wrong from here, gold is your only hedge.
All right, gold could be your only hedge if things go wrong. Kunal Shah, Head of Commodities Research at Nirmal Bang, thank you so much for your time. Pleasure as always having you here with us. And now, despite rising gold prices and despite weak sentiments in the secondary market of late, market regulator SEBI has cleared the IPOs of 13 companies, including startups like Urban Company as well as Imagine Marketing, the company behind the brand Boat. Now, 6 out of these 13 companies have received approvals and are tapping the market to raise over 1,000 crore rupees each, many more than double of that. Now, these companies are banking on the excess liquidity in the market to ensure that their IPOs sail through despite the growing economic uncertainty amid tariff tussle with the United States. Now, other firms that received the nod are Juniper Green Energy, Jain Resource Recycling, Mori Tech, Ravi Infra Build Projects, Space Digitech, Omnitech Engineering, Corona Remedies, KSH International, Alchem Life Sciences, Priority Jewels and Om Freight Forwarders. Now, these companies had filed their preliminary IPO papers between the months of March and June this year and have obtained SEBI's observations during the August 1st to 29th period. Now, Urban Company plans to raise as much as 1,900 crore rupees through its proposed IPO, which includes 429 crore rupees through selling new shares and another 1,470 odd crore rupees through offer for sale by existing investors. Now, Warburg Princess backed Imagine Marketing, the parent company of the electronics brand Boat, known for its headphones and smartwatches, filed paper confidentially in April to raise as much as 2,000 crore rupees. It comprises of fresh equity issuance of 900 crore rupees and an offer to sale for 1,100 crore rupees. And before we slip into another short break, let's look at the global stories that we're tracking for you this Wednesday morning. US President Donald Trump slams India over one-sided trade, defends his 50% US import tariff, cites Harley Davidson struggles with 200% Indian duty. Chinese President Xi Jinping welcomes his counterparts, Russia's Vladimir Putin and North Korea's Kim Jong-un, at China's largest ever military parade showcasing advanced missiles, drones and tanks amid rising global tensions and US-China trade strains. Trump links China with Russia and North Korea and Truth Social, urging Xi Jinping to what he chides him to send warmest regards to Putin and Kim Jong-un over alleged conspiracy against the United States. Trump also seeks expedited Supreme Court ruling after US Appeals Court declares his tariffs illegal. Wall Street falls at the start of September as investors react to appeals court ruling against Trump tariffs. US food giant Kraft Heinz to split into 2 publicly traded companies with $15.4 billion sauces unit and a $10.4 billion grocery arm as food giant seeks growth after sluggish sales. US judge orders Google to share data with rivals in search monopoly case. Company vows appeal amid wider antitrust battles. Investors seem frustrated by Nestlé's prolonged share slump as company ousts CEO Lauren Frixie over a romantic relationship with subordinate. And Jaguar Land Rover hit by cybersecurity incident disrupting retail and production, says no evidence of customer data theft. We'll track these stories after the break. You're watching Morning Brief at 9.
आम पेन रिलीवर एरोसोल स्प्रेस में है, दवा के साथ हवा, मगर डायनापार QPS प्लस में है सिर्फ दवा ही दवा। इसलिए डायनापार QPS प्लस चले ज्यादा। डायनापार QPS प्लस सिर्फ 91 रुपए में, लगा के देखो मान जाओगे।
Power of Digi-Alkaline from Nippo Thor.
Papa, Papa, let's go to the happy birthday, Duda. I love you. Go, Duda, go. I love my Duda. I love my Duda. Skoda.
Welcome back. You're watching Morning Brief at 9. Let's get you all the global stories, especially those from the United States, as US President Donald Trump has once again hit out at India's trade practices, accusing New Delhi of imposing some of the highest tariffs in the world. Now, speaking to reporters, Trump defended America's own 50% tariff on Indian imports, calling it a matter of fairness. He cited the example of US motorcycle giant Harley Davidson, which he said struggled to sell in India because of a 200% tariff on its bikes. According to Trump, the company was forced to set up a plant in India just to avoid those heavy duties. Now, Trump went on to say that while relations between Washington and New Delhi remain strong, the economic relationship has long been one-sided, with India charging what he calls tremendous tariffs. Listen in.
We get along with India very well, but India has, you have to understand, for many years it was a one-sided relationship. Only now, since I came along, and because of the power that we have with tariffs, India was charging us tremendous tariffs, about the highest in the world. They were about the highest in the world, number one. And we therefore weren't doing much business with India, but they were doing business with us because we weren't charging them. Foolishly, we weren't charging them. So they would send in massive, everything they made, they'd send it in, pour it into our country. Therefore, it wouldn't be made here, which is a negative. But we would not send in anything because they were charging us 100% tariffs. And, I'll give you an example. Harley Davidson. Harley Davidson couldn't sell into India. There was a 200% tariff on a motorcycle. So what happens? Harley Davidson went to India and built a motorcycle plant. And now they don't have to pay tariffs.
Donald Trump there defending his 50% tariff on India and giving the example of Harley Davidson, which he says had to invest in India to be able to sell in India to avoid the 200% tariffs. But staying with the tariff story, after a U.S. appeals court ruled last week that U.S. President Donald Trump's tariffs were illegal, Trump said that his administration will now move to the Supreme Court. The court ruling threatened to undercut the Republican president's use of levies as a key economic policy tool. The court allowed the tariffs to remain in place through October 14th to give the Trump administration a chance to file an appeal with the Supreme Court. Now, speaking from the Oval Office, Trump said he would seek an expedited ruling as early as Wednesday, stressing that an early decision is critical. He further said that tariffs have brought in billions for the U.S. economy. Now, Treasury Secretary Scott Bessent, meanwhile, voiced confidence that the Supreme Court will uphold Trump's use of emergency powers to impose sweeping tariffs. Listen into Trump again.
It's a very important decision, and frankly, if they make the wrong decision, it would be a devastation for our country. We've taken in trillions of dollars. And by the way, all these countries signed agreements. As an example, They signed. They're all happy. Everybody's happy. But some whack job put in a lawsuit. It went before a very liberal court, and the liberal court ruled, it was 11, they ruled 7-4, with one of the most liberal of them all voting in our favor because they're patriots. I think I give tremendous credit to that judge. And now it's going to the Supreme Court. Now we're going to be asking for early admittance. We're going tomorrow, and we're going to ask for an expedited ruling because, when you look at the stock market's down today, the stock market's down because of that. Because the stock market needs the tariffs. They want the tariffs.
And on to stories from corporate America. U.S. food giant Kraft Heinz is splitting up. The company announced on Tuesday it will split into two publicly traded firms, one dedicated to the sauces business and the other to groceries. The sauces unit, which is Heinz, brought in more than $15 billion in sales last year, with stand apart from the grocery arm Kraft, which generated about $10 billion as the packaged good maker looks to reignite growth after years of sluggish sales.
Kraft Heinz said on Tuesday it would split into two publicly listed companies. One will focus on the sauces business and the other on groceries. Global Taste Elevation Co. houses brands such as Heinz Philadelphia and Kraft Mac and Cheese, while the North American grocery company consists of Oscar Mayer, Kraft Singles and Lunchable Labels. The sauces unit raked in about $15.4 billion in sales in 2024. The grocery business generated about $10.4 billion in sales. The company expects the tax-free spin-off to close in the second half of next year. Kraft Heinz said in May it was looking at opportunities for mergers and acquisitions to shore up shareholder value. It's been struggling like other packaged food companies as consumers shop for healthier and more affordable condiments and snacks. The company's shares were slightly up in pre-market trading. The stock has lost more than a fifth of its value over the past 12 months.
Staying with US stories, Google's parent Alphabet has been ordered to share its data with competitors to boost competition in online search. A federal judge in Washington handed down the ruling but rejected prosecutors' push to break up the company by forcing it to sell its Chrome browser. Now, the decision comes from a 5-year legal battle after Judge Amit Mehta ruled last year that Google holds an illegal monopoly in search and related ads. Prosecutors had pressed for sweeping remedies, including steps to keep Google from extending its dominance into artificial intelligence. Google says it plans to appeal, warning that data sharing could expose its technology to rivals, and the legal fight could drag on for years. Meanwhile, the tech giant also faces court battles over its app store and advertising businesses, with more trials scheduled in the months ahead. Nestle investors are facing fresh turmoil after the Swiss food giant ousted its CEO Laurent Trixie over an affair with a subordinate. It marks the company's second leadership shakeup in just a year. The move adds to investor frustration, with Nestle shares sliding for 3 years and showing little sign of recovery this entire year.
Nestle investors were pitched back into choppy waters on Tuesday. The Swiss food giant ousted its CEO Laurent Trixie over an affair he had with a subordinate. It's another blow for Nestle investors, who have been frustrated with 3 years of share price declines and no signs of a recovery this year. Trixie will be replaced by Philippe Navratil. He's a rising star at the maker of Nescafé coffee and Kit Kat bars. The dismissal of Trixie follows an investigation into an undisclosed romantic relationship with a direct subordinate. Nestle said it breached its code of business conduct. Trixie spent 39 years with Nestle and just a year as its CEO. Now he will receive no exit package following his departure, the company told Reuters. Nestle's shares, a bedrock of the Swiss stock exchange, have lost almost a third of their value over the past 5 years. Trixie's appointment failed to halt the slide, with the company's shares shedding 17% during his leadership. The dismissal was featured on the front page of Swiss newspapers, with one noting that Nestle had lost its legendary stability, where CEOs stayed for years before eventually becoming chairman.
And finally, let's leave you with these spectacular visuals coming as Vietnam celebrated the 80th anniversary of its declaration of independence from colonial rule on Tuesday with its largest military parade in decades. Tens of thousands of people crowded the streets of the capital Hanoi, most of whom were wearing red shirts and holding Vietnamese flags in a strong show of nationalism in the communist-run country. Visuals there on your screen. We leave you with these visuals right here on News 9. But do keep watching as news updates continue right here.
Chủ tịch Hồ Chí Minh vĩ đại. Giúp ngư dân vươn khơi bám biển. Mình vừa là lái, mang trong tim.
तो अपने सोने को काम पे लगाइए, आज ही कॉल कीजिए 1-800-313-1212 पर।